Adobe announced their earnings yesterday, and I have a fresh set of financials to go over and take a look at this company. Adobe is a software company. They have terrific margins and they have been growing their business. They're caught up in the AI paradigm change, meaning that they were a software company for the creative arts, people that are doing digital media, creating content, either to be used professionally in education, on YouTube, and all the networks I'm sure are big Adobe users. Now, during the AI revolution, a lot of investors have been concerned that Adobe is going to be replaced by AI. Is that a real risk, especially over the next 5 years? I'll look at that and I'll give you an opinion on whether that's going to happen. I'll also give you a full valuation of Adobe. I'll go through their cash flows and I'll give you a net present value of those cash flows to determine their intrinsic value. It's a great idea to buy terrific businesses when they are being traded under their intrinsic value. So I'll take a look at their intrinsic value and see if Adobe potentially is a good opportunity or if they're overpriced and are being sold at a premium. So let's take a look at Adobe as a company, and then we'll get into their fundamentals, do a valuation, and then I'll make a decision on whether to buy, hold, or sell Adobe. So Adobe, as mentioned, is for creative people that are creating content, whether it be as simple as a presentation that would go out to people in the form of a PDF or really nice graphics that would go on a YouTube video. The newest advancement is their AI applications. Firefly is one of the things that's out there. With Firefly, you can create an image by typing out a description of what you want to see. Here I created a mountain lion, and it gave me a couple of different pictures of a mountain lion as an example. Now, Firefly is interesting, but it's not a huge leap forward. I created a mountain lion photo, but I could have easily just gone online, let's say in Google Images, and just searched for pictures of a mountain lion and then copied and pasted it. It would have probably taken a little less time. I'm sure this will get better over time, but at this point, it's not a humongous leap forward. And I'm not sure that I would want to be dealing with an application to create a simple image. Maybe some creative people find this tool to be save them time, to be productive, to be helpful. But for me, I'm not seeing the big advancement just yet. Adobe is committed to revamping all their products and giving them a fresh experience that involves AI. So across the board, all their products are going to have AI experiences. That's a really good idea. I think AI will influence the way we use software, and Adobe's got to keep up or they'll be replaced. Some new solution will come out that has just features that users really like. Adobe should self cannibalize their products with newer products that are better and they can charge more money for. Adobe announced their earnings and I thought the earnings were quite positive. Here's what I liked is their cash flow really jumped up. And a year prior, they were dealing with a cancellation of an acquisition, which drained on cash. Now that's behind them, and the cash really jumped up. Revenue grew as expected. This is a big company, and they're growing by more than 10%. That was really good. They guided to continue that path of growth, that path of profitability, and the market didn't like that. The market wanted, I guess, Adobe to beat their earnings and then raise. Well, the current environment, the economy is not doing so great. In fact, a lot of people believe we're going into a recession. So I don't know that an expectation for Adobe to raise their guidance was all that conceivable. For them to just maintain their guidance, I think was a good thing to do. If they can beat those numbers in the new fiscal year, that'd be great. But the market, I think, is reacting negatively to the fact that they didn't beat and then raise. Adobe's a $190 billion market cap company. The revenue is 22 billion, which they're a big revenue company. And their forward P is low for a company that has super high margins, good revenue growth, great cash flow, 21. And analysts believe it is discounted by 29%. A lot of analysts cover Adobe. Over the past year, the stock is sold off by 21.74%. It is down in the pre-market about 5%. So that's going to turn into a 26, 27. Now, the reason I bought into Adobe the last 12 months is I really like the company. It's a really good business. And if the market discounts it, it really catches my attention. It's not an execution problem that Adobe's having. It's not a products are not desirable problem because they're growing the revenue. It's a the market is believing that AI is going to replace Adobe, but I don't know if that's going to happen. I'm betting on Adobe is going to come out ahead over the next 5 years. I don't think AI is going to do anything to Adobe. If anything, Adobe can use AI as a refresh cycle for their software. When we look at their fundamentals and look at revenue, these guys have been getting it done, up 10.5% in the trailing 12 months. They continue to make their business bigger and bigger over time. And I love their margins. Just software companies are so profitable. Gross margins of 89%. That is incredible. We look at their operating margins, 36%, profit margins of 30. So there's a metric for SaaS companies, software as a service software companies, and it should be 40 if you add profit margin plus growth. The growth was 10.5, the profit margin is 30.6, so we're up to a 41. So it passes that ratio that a good SaaS investment should have that combination of profit margin plus growth rate exceeding 40, and Adobe's at 41. So overall, Adobe looks fantastic. And one last metric is free cash flow margin is 41%. That's incredible. That's awesome free cash flow. The company has a very good balance sheet. They have more cash than they do debt. They have about $1 billion of excess cash when you compare it to its debt level. So the balance sheet's really strong. When we look at their forecast, 25 analysts believe the stock is discounted on average. The worst case scenario analyst believes it's discounted. So Adobe has a lot of respect in the investing community. Adobe is a known factor. They've been around for more than 30 years. They've been successful for a long time. They've been entrenched in their markets for a long time, and they've been the leader as well. When we look at their forecast on the revenue, they're going to continue to grow very well. This is very consistent growth. They just keep getting bigger and bigger, attracting more customers. Current customers are buying more products. And their earnings per share is going to expand as well, a little faster than revenue. So that looks really good. And their forward P keeps dropping, which is an opportunity. This is what I want to see in a company. Just really solid fundamentals, a solid business, a business that's in leadership position in its markets. So all this looks good to me on Adobe. So I put together my own valuation for Adobe using a model I created. And this model uses free cash flows. I forecast the free cash flows I expect out of Adobe, and I discount those free cash flows. And I'm doing that in this section of my model. I'm taking what they currently have as a run rate. I'm actually taking it up 20% because they exceeded the cash flow I expected. It was a positive surprise from Adobe. And then going forward, they're going to grow their cash flows more than 10%. So years 2, 3, and 4, I'm going to grow at 10% and then set up terminal value to grow at 5%. The present value of all those future cash flows is 279 billion. When I discount all those free cash flows by 8%, I add cash and take away debt, and I arrive at an equity value of the company of $280 billion. The current market cap is 194. So when I compare the value of the company based on cash flows versus its current pricing on the stock market, it presents a 44% discount. That's a really good discount on a high quality business. Adobe isn't quite a Microsoft or let's say an Amazon or a Google, but it's pretty close. This is an excellent business. So that's an attractive discount. When I value the company based on earnings per share and leave a PE reasonably at 24, growth rate of 9, I get a discount of 24. I'm just slightly under what all other analysts were saying. When I combine the two and I put more weight in the free cash flow method, I get a discount of 37%. That's a really nice discount on Adobe. So where do I put Adobe in my desirability quadrant? I really love buying businesses in the green that have really strong moats, barriers of entry that are very profitable, generate high free cash flows, and continue to get larger, more valuable, more powerful. And I put Adobe clearly in the green. Reasons for that is their leadership in the creative arts software category. No one else really competes with them in certain markets. There are some competitors, but Adobe is clearly the market share leader. So that network advantage is quite powerful. I think as people use their products, they'll use them for an entire career. So the switchover cost from a knowledge loss and so forth, adapting to new software, I think it's a good one for Adobe. They really keep their customers for a long time. Overall, I think their profitability, their margins are very strong. Free cash flow rates really high. So I think Adobe is going to continue to do well. Their fundamentals show that to me. And the market has it wrong on Adobe. I'm going to continue to buy Adobe shares and continue to build an even more a bigger solution position in the stock and really hold the stock long term. Over the long haul, I can make a lot of money if I buy excellent businesses when they're being priced well below their intrinsic value. And I believe Adobe is being priced substantially under their intrinsic value. This is a quality business, great balance sheet, generating great cash that is buying back shares and therefore making each shareholder own a greater portion of the company. That's also a positive. So that is my video on Adobe. I hope you found it interesting. And just a reminder, I'm an individual investor just sharing my experience with you, not recommending you buy, hold, or sell Adobe. And I'm not providing any financial advice. Thank you for watching. Good luck investing.